The week is opening with a blank economic calendar. That's why major currencies are trading in response to the events that occurred on a Friday and the weekend. The recent years is unfavorable for both the US dollar and the euro. The US dollar lost ground due to unexpectedly weak employment and wage growth, and the euro is falling due to the political deadlock in France after the second round of elections to the country's parliament. However, the shock of the far-right party gaining a majority was avoided in the short term. However, in the medium term, the victory of the far left also does not add political certainty. Such prospects also raise concerns about France's budget deficit and the stability of the eurozone as a whole. According to forecasts from sociological agencies, the left parties will receive from 184 to 198 seats in the new French parliament. President Emmanuel Macron's centrist alliance was expected to take between 160 and 169 seats. Marine Le Pen's Rally National and its allies would take between 135 and 143 seats. As the markets are digesting the fallout from the elections in France, the US dollar remains in shadow following unexpectedly weak US employment data on a Friday. Although the non-farm recorded an increase in new jobs by 206,000 in June, the report by the US Department of Labor alarmed market participants. In many ways, the reason for this was the revision of the previous report downwards from 272 to 218,000. To sum up, employment growth has not reached the threshold of 250,000 for 3 months in a row, which is necessary to maintain the stability of the labor market. Besides, the unemployment rate inched up from 4% to 4.1%. That's the indicator, on the contrary, has been going up for the same 3 months. This factor sharply increases the likelihood of a rate cut during the upcoming meeting of the Federal Open Market Committee. It's scheduled for July 31st. Such prospects, alongside extremely poor and worse than expected non-farm payrolls, became the reason for the slide in the US dollar, and today it's licking its wounds after falling almost 1% last week. The US dollar index, which determines its exchange rate against the euro, pound sterling, yen, and 3 other major partners, traded in the range of 104.80 to 105.00 with a high volatility. At the same time, the US dollar is staying afloat as a safe haven asset until coalition negotiations are completed in France and the final balance of power in parliament is cleared up. Thus, the US dollar has every chance of winning back some of its recent losses. As the macroeconomic calendar is empty today, the market will focus on other factors. In particular, the US dollar is obviously oversold. Moreover, the outlook for the dollar may be affected by political events in the United States this week. Ahead of the presidential election in November, there are growing calls for Joe Biden to withdraw his candidacy. If this happens, the safe haven dollar could weaken. Perhaps the markets will hear some news on this matter in the coming days. And this week, dozens of world leaders will gather at the NATO summit in Washington. The US president is preparing to hold a rare personal press conference on the sidelines of the forum. By the way, unlike Joe Biden, French President Emmanuel Macron spoke frequently with breaks of 1 or 2 days. Interestingly, last week he disappeared off the radar, and this further strained the European market. The euro-dollar pair closed the week above the important round level of 1.08, and today the euro even attempted to recover after overnight losses and settled within the intraday range of 1.0803 to 1.0846. So, from the point of a technical analysis, traders share the bullish sentiment on the euro. If we focus entirely on the technical analysis, a movement above 1.08 could encourage further growth of the euro. And this, in turn, will help the euro-dollar pair update the local high of around 1.0840. As for the downward scenario, it will become relevant during the pullback. Another condition is that the price should settle below the level of 1.08, at least on the 4-hour time frame. At the same time, the weak dollar did not help oil growth. As a result, oil prices were unable to gain a threshold at the levels achieved by the end of the last week. This was due to the asset being overbought, and this factor is now crucially important. The Brent price has returned to the range between $86 and $87 per barrel, and this is the level before the publication of the data on the sharp contraction in the US oil inventories. The reason was precisely the US non-farm payrolls. Indeed, the ongoing rise in unemployment rates threatens to reduce demand in the world's largest economy, and this factor triggered a decline in the oil prices. Thus, Brent crude dropped below $86 a barrel, and now a further dynamic will depend on data on the US oil inventories, which are published on Tuesday evening. Until then, oil prices are expected to go through a pullback. However, given the recent growth, it's a logical downward move in the market. To extend growth, the Brent price needs to settle above $88 per barrel. You have watched a roundup of the global financial markets for today, July 8. Keep close tabs on the global markets on the InstaTraders TV channel. Feel free to leave your comments. Our experts are always ready to answer all your questions. Thank you for watching and see you online tomorrow.